Now, while I'm a big fan of credit cards, I like the perks, I like the cash back, I am definitely not a credit card hacker. I know there are a lot of people in the space that spend a lot of time, effort, and energy trying to figure out ways to hack credit cards. I don't think that that's worth my time. For me, I like a couple of things. I like the cash back and I like some of the travel rewards, and I kind of focus on those things, and then I don't play the game of trying to hack all the crazy points, trying to hack all the credit cards, trying to get all the sign-up bonuses and stuff. For me, it's not worth it. I'd rather spend my time building my business and earning more money and then just using the credit cards for whatever I do. If you have a business, though, credit cards can be very valuable, because when you have a business, you generally have a lot of expenses, or at least growing expenses, because as your business grows, your expenses are going to grow. You might spend more money in advertising, you spend more money in marketing. In your personal life, well, there's generally a limited amount of expenses that you might put on your credit card. Maybe your groceries, maybe your gas, maybe your flights, and a couple other things here and there, but generally you don't have too many personal expenses, but business expenses can really rack up. And this is where credit cards can be even more useful, because credit cards can also help you categorize your spending, which can help your accountant help balance your books. Because I know some businesses that really avoid the use of credit cards and will try to do primarily direct deposits out of the bank, which can be a lot more work when you're trying to actually reconcile your financial books. So just something to keep in mind. Now, the reason why I became such a user of credit cards isn't because I grew up loving credit cards. It's because I dealt with a lot of problems with debit cards and cash. The other thing was, before, when I worked in the event planning business when I was in college, I used to operate with a lot of cash because a lot of people paid me with cash, which was really nice because I had a fat wallet, but that also made my wallet a prime target to get robbed. And that's what happened twice, both of the times in the gym locker rooms, where I kept my wallet in the gym locker room. I had a lot of cash in my wallet, hundreds of dollars of cash, maybe even $1,000 of cash in my wallet. And 2 times, on separate occasions, I went to my wallet and I saw that my wallet felt very light, and I realized that all the cash was gone. There is a place and use for cash. I try to generally keep some cash in my wallet just in case. Not a lot of cash, but a little bit of emergency cash just in case, although sometimes I forget to put it in there. But the advantage of a credit card is you are protected against that, because my credit card has been stolen. I've had people steal my identity. And in each one of those situations, I never lost money, because now I can freeze my credit. I can also freeze my credit card. And if there was a fraudulent transaction, the credit card companies will work with you to reverse them. But I'm going to emphasize this one more time now. If you're going to use a credit card, you have to abide by these 2 rules. If you cannot abide by these 2 rules, then don't use a credit card. It's not worth it. It's okay. Forget about the points. Forget about the perks. It's not worth it. It's not that deep. In that case, use a debit card, use cash. It's going to save you way more money in the long run, because if you start buying things that you don't need or that you wouldn't normally buy with your credit card, well, now, number one, you're spending a lot more money, and you're a lot more likely to spend money that you can't afford to spend, and now you end up in credit card debt. And credit card debt is one of the most expensive kinds of debt out there, and it will keep you from building any sorts of wealth, because these credit card companies are charging you 18, 25, sometimes 30 or 35% in interest on your money. If you could get those types of returns on your money as an investor, you're not going to retire a millionaire or a decamillionaire. You would be retiring with hundreds of millions of dollars. Hundreds of millions of dollars if you could get 25 to 30% returns on your money consistently. This is why credit card companies get so rich, because when a lot of people go to college, or you graduate college, you feel like you need to have a credit card because everybody is telling you that, oh, you got to open your line of credit, you got to build your credit score, although your whole credit score is a big scam for a lot of people. What you really need is to get your spending under control. And when you can do that, now using a credit card can really help you. But if you go and get a credit card, a lot of people use it like a free money printer to fund whatever spending that you want. And then a few months later, you realize, oh my God, I spent $8,000 at Gucci on what? And now you got to pay it back plus interest. And this is why you got to know what you're doing before you go out and get a credit card. It's like a weapon. You got to be trained on how to use the weapon. That way you can actually use it to your advantage. Otherwise, it's going to turn around and shoot you in the foot. And that's what's happening with a lot of people in credit cards. It's a great tool when you know how to use it. When you don't know how to use it, it's going to be used against you. And that's what I want you to understand when it comes to credit cards. Now, one of the things that I've talked about in the past is when you get that credit card cash back, you also want to be strategic here because yeah, you could use it to lower your balance, but you could also use that credit card cash back as, say, a investment bonus. Maybe you can use that credit card cash back to invest in the credit card companies or some other investment that you're using the cash strategically as a way to continue building your wealth instead of just buying liabilities. Because the way you become wealthy is by buying investments. The way you make everybody else rich is by buying liabilities. I want you to make yourself rich before you make everybody else rich. There's nothing wrong with buying nice things, nothing wrong with buying expensive things, nothing wrong with buying extravagant things, as long as you can afford it. And if you really want to be able to afford it, work on building your assets first. Now again, for those of you that are investors and you want to stay up to date on what's happening in the financial markets, my team at Briefs Media publishes a free daily newsletter called Market Briefs, where we break down what's happening in things like the economy, the stock market, housing, crypto, and the global markets into a fun, witty, and easy to read newsletter. It's completely free. Plus, when you join Market Briefs, you'll also get our investing masterclass free as a bonus just for joining Market Briefs. So if you want to get Market Briefs and our investing masterclass, I have that link for you down in the description below. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.